level of M&A activity in the broadly defined wealth management / RIA sector is at an all-time high. So 2025, we are tracking to kind of hit an all-time high in terms of deal activity. And some of the drivers of that deal activity are as follows. Well, first of all, it's a very attractive sector. People appreciate the recurring fee nature of the business. It's a capital light business, so you don't have to invest a lot on the balance sheet. The demographics are super favorable. We've got a trend of aging population, defined benefit pensions have gone away, so people are more and more in charge of taking care of their retirement income, right? And so people have discovered this as a very attractive and positive industry. And as a result, there's a lot of M&A going on. Private equity has discovered the space. So there's all sorts of private equity coming into the sector looking to do deals. As we've heard about in the conference here, advisors are aging. So there's a succession planning element to this. People need to find other G2 folks to take on their business. And one way to address that is through acquisitions. I would say also some of the other trends we're seeing, clients are looking for more and more services and capabilities out of their advisors. It's harder for the smaller firms to compete with the mega RIAs of the world. And so you've got a lot of founders that are thinking about succession. They're thinking about how am I going to be able to help my clients going forward. They're needing to invest a lot of money to provide a broader array of services to clients. People are looking for bigger one-stop shop that can do trust, estate, insurance, lending, all these things. It's just hard for the small guy to deliver. And so they're sort of faced with this issue of, well, I can spend a lot of money and try to build it myself, or I can do a deal and partner with somebody that's got 15 people that are already doing trust and estate. So I would say those are some of the trends we're seeing that are driving significant activity in the M&A space. The demographics are not going away. Succession planning is not going away. Factors that could impact the level of activity and the valuations, I should have mentioned that, with this PE coming in, valuations are super attractive. That's another reason why people are coming off the sidelines and considering deals. But if the equity markets tank, or if interest rates spike, then it could get a little more challenging. We saw that a little bit when COVID hit. There's a lot of uncertainty. People thought the world was going to go, going to end. But once people realized that that's not the case, we had unprecedented level of M&A activity. So I think it will continue. You get the question all the time, what are valuations going to do? I personally don't think they're going to go higher than they are today. And as I know, everybody looks really smart when the equity markets keep going up. If we get some choppiness, then you may have some choppiness in deal activity. First and foremost, you should think about, is this good for your clients? Is this good for your employees? And then perhaps third is this good for me as the owner of this firm and we're going to get a nice paycheck, right? But if the first two parts of that don't work, then it's going to be problematic. Then you got to think about what you're looking for in a potential partner. Putting valuation and money aside, right? Because there's ways to structure and maximize value. But what are you looking for in a partner? Are you looking for somebody who's going to help you grow the business? Are you looking for a partner that's going to help you provide more services? Back to the point on the clients. Cultural fit, everyone talks about that. There's a lot of discussion about cultural fit on the seminar, and that's super important. So there's lots of things to think about separate and aside from sort of the valuation. But really at the end of the day, it comes back to the clients. And is this firm going to help you grow and achieve the objectives of your clients, employees, and shareholders?